Hello, this is Steve Malone with CompsFX. I hope you're doing well today and you get some good trades. I have a special treat for you today. We're going to record the FOMC statement today using the DOTS method. Many of our clients are using the DOTS method and they really want to see what takes place and how the market reacts related to the DOTS levels. Now, what I'm using today is the New York session DOTS levels. Now, the interesting thing is we may actually see the market move towards some other DOTS levels that may be associated with maybe the Australian session open, since that's the start of the day. But if we take a look here at the euro dollar, we've seen that the euro dollar has moved from a high back here, made a move down right about through the weekly mid low, pushed down overnight to the weekly low, and today it's worked its way back up right to the buy target number 2, and we're just minutes away from the FOMC rate announcement as we sit right around the buy target number 1 level right now, sitting just in the ballpark of about 38.65. If we take a look at the pound dollar on a 30-minute chart, the market was a bit back and forth from the open of the week to the mid-high of the week, kind of back and forth. And today we had a very strong move on the pound, a lot of buying in on the pound, and saw this push to the upside, and it actually came up here and it pinned a little bit high right at 169 and then fell back over, rested a bit at the weekly extension high number 1 and kind of sitting right here about the 68.75. So we've gone well beyond our DOTS levels, and again in this case what we look to do is take the difference between the buy entry and the buy target number 2. We stack that, and that's about the distance that we have right at this moment where the market's sitting at. So what I'm going to do is I'm going to watch what the FOMC statement does in relation to the DOTS levels. And you may be surprised how well the market treats these levels. So I'm going to set this to tile so you can watch it in live action as the announcement comes out. So the announcement's coming out right now. Again, we don't expect Janet Yellen to be speaking today. That's been put off to a later point. We're just looking to see how the market reacts, and does the market react to DOTS levels that were noted at 8 a.m. Eastern this morning. So the FOMC statement has been released. Let's take a look at what takes place in the market. As we can see, the market's kind of pushing up a little bit, a little back and forth. We have some weakness in the dollar, getting a little bit of strength into the euro and the pound, but both of them had made some pretty good moves for the day. Going back up here towards this 68.80 area, maybe the 68.90 area, almost got to it in the pound, and a little back and forth going on in the euro dollar. Now, a couple of things about this particular announcement is we're at the last day of the month, and not a lot is expected at the last day of the month as many institutions are squaring positions, rolling positions over to the next month, or attempting to go flat. Also, as we go into May the 1st, we're going to have a number of central banks that are going to be closing for a particular holiday. We'll have the ECB shutting down, the Swiss National Bank shutting down, and China will be also closed on holiday. Now the push up, we see the euro coming up right to the buy target number 2 level. We see in this case how the market has pushed back up towards that ADR level. And that's another thing I have on my chart, is just to watch the weekly ADR levels in comparison to the DOTS levels. Not a lot of reaction to the FOMC announcement, as many had anticipated that they would do what they've been doing. Not getting a lot of action here. I thought we might get some more. We can see here that the market's pulled down to the buy entry level back in New York and has pushed up the buy target number 2. Here we're kind of bouncing between that pullback that we got. As a matter of fact, that pullback from the low to the high, and this time we had this pullback to 38.2. So we're kind of bouncing between an ADR level and the 38.2. I thought we might see it push back down as it did earlier, back down towards that buy target number 2, which is now the 50% move from the low it had earlier this morning, right around 68. So long story short, the Fed leaves the federal funds rate at 0 to 0.25% as expected, and also they reduce their monthly bond buying program by another $10 billion. We're not really getting a lot of reaction in the marketplace, but what I want you to note in all of this is how the market is treating these DOTS levels and the ADR levels that I pointed out to you earlier, moving really back and forth between them. We've talked about oftentimes in the DOTS trade room how the market will work off of certain DOTS guppy levels. You can see in the euro dollar that the market not only bounced off the buy entry level, but also how the market really reacted to that 15 moving average. We see this happening over and over again. Now, I'm on a 30-minute chart to give a little bit more ease of seeing the whole big picture, but if I move down to a 15-minute chart, you can again see how the market in this situation is reacting to the 30 moving average. On again the 15-minute chart, how the market's reacting to the 30 moving average. So oftentimes the market will move back towards the long-term guppies and it'll take a bounce off the long-term guppies, and we're seeing that. Whereas when we were at the 30-minute chart, you can see that that 30 moving average is the 15 moving average, but again how the market is treating that. If you go over and take a look at, here we are, the pound dollar 30-minute, and go down to the 15-minute chart, you can see how the market is more or less working off of that now 15 moving average. And so markets retreated back to it, a little bouncing back and forth, but again, not getting as much in the market as I thought we might see. I think what I'm trying to get across to you in this video today is really consider as you trade what the DOTS levels are showing you and how the market reacts to those DOTS levels and the ADR levels. Just be mindful of what the market's doing and be aware that oftentimes the market will react right to these DOTS levels, as it's clearly evident in the euro dollar. Now what I want to do at this point is I just want to change the pound from the New York session here. I'll set that to false. So we're just going to be looking at the Australian session. Just see what the numbers were during that period of time. And you can see, this is interesting, I moved back to the original start of the day using the Australian session from the open of the day here, and notice how the market reacted. The market literally came back down to a DOTS level. So again, what I want you to note is if you're using the DOTS levels from session to session to session, I do recommend always be aware of the start of the day. The market has a tendency, as we've talked about, to work off that daily open and then move towards DOTS levels for the day based upon the open of the day. So you can see here's the open of the day. The market bounced around, worked up from level to level to level. Then it made a push up to an ADR level, but fell back down to the buy target level during the FOMC statement, and then we're taking a little bit of bounce back up. So just be cognizant as you trade. Be aware of your DOTS levels, be aware of your ADR levels, and look for the market to move to those levels even during times where there's not a lot of activity, but the market has a tendency to honor these levels. If you want to know more information about the DOTS method indicator, go over to www.compassfx.com/DOTS. If you want to learn more about the ADR, the average daily range calculator, go over to www.compassfx.com/ADR. Well, this is Dean Malone with Compass FX. I hope some of the information I've shared with you about using the DOTS levels and the ADR in your trading will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.